An unprecedented development has taken place in the history of the U.S. Federal Reserve. President Donald Trump announced that he has dismissed Federal Reserve Governor Lisa Cook. This is not merely a change in administration. It is a political move that could shake the very foundations of global markets. Because in the 111-year history of the Fed, this is the first time that a president has directly removed a governor. Trump's move is being considered one of the biggest political interventions in the independent monetary policy of the U.S. economy. So why is this decision so important? It's not just about replacing a single person. It could mark the beginning of a domino effect stretching from the strength of the dollar to interest rate policy and even to gold prices. Is this move really only about mortgage fraud allegations, or is there a larger strategy at play, shaped by the upcoming elections and mounting economic pressures? Trump has recently made clear his desire to accelerate interest rate cuts and has increased pressure on the Fed, making these questions even stronger. Let's not forget, Fed independence has long been regarded as one of the cornerstones of America's economic credibility, and every move against that independence directly affects the confidence of global investors. If investors lose faith in the U.S., the consequences could ripple far beyond Wall Street, sparking chain reactions that might shake the entire global economy. In this video, we will deeply analyze the real reasons behind Trump's decision to remove Lisa Cook, the potential impacts on markets, and what this means for the future of the U.S. economy. We will also look at the possible implications for gold, the dollar, and crypto markets. Because this is not just a political clash in Washington. It is a development that could affect the value of the money in your pocket, the interest rate on the loan you take tomorrow, and global trade balances. Before we begin, if you value this kind of deep analysis, don't forget to like the video and subscribe to the channel. Because in the coming days, this issue is expected to deepen further, and even be taken to court and the Supreme Court. So here's the question. Should a president have the right to remove a Fed governor in this way? Share your thoughts in the comments, because this debate concerns not just economists, but every American and every global investor. Now let's look at the background of this historic move. Did Trump really just react to the allegations, or is this the opening act of a war on interest rates? The answer will unfold in the next few minutes. Donald Trump's decision to remove Federal Reserve Governor Lisa Cook is not merely an administrative change. It has triggered one of the sharpest clashes between the American legal system and political power, because the law states that a president may only remove Federal Reserve Board members for cause. But here lies the critical question. What exactly does for cause mean? The law does not clearly define this term, and this is precisely where the Trump administration seems to be exploiting the gray areas of the law. In a letter he posted on social media, Trump claimed that Cook had committed serious ethical violations in her financial dealings, undermining her credibility as a governor. In particular, she allegedly took out mortgage loans for 2 different properties at the same time, an act Trump described as potentially criminal. However, these allegations have not yet been proven in court. The Department of Justice has announced it will investigate the matter, but no formal charges have yet been brought against Cook. This brings us to the key question. Can a president remove a Fed official based merely on the possibility of an investigation? Politically speaking, Trump may be aiming to kill 2 birds with 1 stone. On the one hand, he has repeatedly said he wants interest rates to come down quickly, because lower rates will stimulate both the stock market and consumer spending ahead of the election. On the other hand, removing Lisa Cook, a Democrat appointee and the first of her kind in Fed history, serves as a power play to his own political base. Indeed, Democrats in the Senate have labeled this move an authoritarian power grab and said it must be challenged in court. The legal process looks set to be highly complex. Cook's lawyers argue that Trump's decision is unlawful and represents an unconstitutional interference with the Fed's independence. This case will likely move through federal courts and eventually reach the Supreme Court. If the court rules that Trump has not overstepped his authority, it could open the door for future presidents to exert similar pressure on the federal. On the other hand, if the court rules against him, Trump will be forced to back down, a major blow to his political prestige. So the big question is this. Is this move simply a legal dispute or part of a broader strategy aimed at undermining the Fed's independence? In the next section, we'll examine how this decision threatens the Fed's independent structure and why it has shocked global markets. The independence of the Federal Reserve is critical not only for the United States, but for the global financial system as well, because the ability of central banks to make interest rate decisions free from political pressure is considered essential for fighting inflation and maintaining monetary stability. Trump's decision to remove Lisa Cook is seen as a breaking point for that independence. If a president can replace Fed members in line with his own political goals, this would not only shape today's interest rate policies, but also tomorrow's inflation expectations. Lower interest rates are often a popular move before elections, but in the long run, they can fuel inflation, undermine the global reputation of the dollar, and erode investor confidence. Following Trump's move, the U.S. dollar index fell 0.3%, while gold prices rose 0.45% as investors sought a safe haven. This was only the first signal. If markets begin to doubt the future policy direction of Fed, whose independence is questioned, bond yields could rise, driving up the U.S. government's borrowing costs. Such political interventions have often been seen in developing countries in the past, but in an economy like the U.S., which holds reserve currency status, the echoes are far more profound. From China to Europe, from the Middle East to Latin America, countries plan their investments based on the dollar's reliability. If that trust is broken, the shift toward alternatives such as gold and even cryptocurrencies could accelerate. This would mark a new fracture in the global financial system. So the question remains, will this crisis remain a reflection of U.S. domestic politics, or is it the precursor to an economic earthquake that could change global trade balances? At this point, the Fed's upcoming meeting is a critical test. At the September 16th to 17th meeting, the decisions taken will not only determine interest rates, but also reveal whether the Fed is truly independent. Markets reacted immediately to Trump's announcement. Dow Jones futures fell 0.2%, S&P 500 0.3%, and NASDAQ 0.5%. While these declines did not amount to a collapse, they signaled that investors were moving into cautious positions. In the bond market, yields rose, showing that investors have begun demanding a higher risk premium for the future. The dollar's weakness temporarily relieved emerging markets, as a weaker dollar eases their debt burdens. But the key question is this a lasting trend or just a temporary fluctuation? The rise in gold prices shows that the market is seeking a safe haven, while Bitcoin and other cryptocurrencies also saw a modest uptick. In the crypto world, this move is already being labeled as America's financial independence crisis. For assets like XRP at the center of regulatory debates, the picture is even more intriguing. If Fed stability is shaken, the role of digital assets and payment infrastructure may once again come to the forefront. Is this just short-term turbulence? No, because whenever there's uncertainty within the Fed's operations, investors become more reluctant to take risks. If international funds begin to pull out of U.S. Treasury bonds, this would no longer be just a monetary policy debate, but the spark of a global liquidity crisis. This development has already spread far beyond Washington. European central bank officials declared central bank independence is our red line, while China is looking for ways to exploit the crisis to its advantage. If U.S. credibility is undermined, the yuan's chances of becoming a global reserve currency could increase. In the Middle East, oil exporters are starting to test alternative payment systems instead of the dollar amid the uncertainty. Looking at 2025 to 2026 projections, the effects of this move seem likely to be felt not just today, but over the next 2 years as well. If the Trump administration begins directing interest rates for political purposes, hitting inflation targets will become more difficult. The long-term value of the dollar will be questioned, and U.S. borrowing costs will rise. This would directly affect the daily lives of Americans through higher loan interest rates, rising consumer prices, and declining purchasing power. According to rumors in Washington, this move may not be limited to Lisa Cook's removal. The Trump administration may be planning to restructure the Fed's leadership, push for more aggressive rate cuts, and artificially inflate economic growth ahead of the election. While this strategy may stimulate markets in the short term, in the long term it could trigger a scenario reminiscent of the inflation crisis of the 1970s. Another possibility is that this move is being used as a bargaining chip. Trump may be turning the Fed into a tool to increase pressure on Congress and push through his policies. This could limit the U.S.'s room to maneuver not only economically, but also geopolitically. What we are witnessing today is not just a personnel change. It is a breaking point for the future of U.S. monetary policy. Trump's removal of Lisa Cook has cast a shadow over Fed independence and left global investors with a troubling question. Is the dollar still a safe haven? In the coming weeks, this question will become even more central. Throughout this video, we have examined the political, legal, and economic dimensions of this move. But the most important point is this. If the courts ultimately rule in Trump's favor, presidential influence over the Fed could become permanent. If the ruling goes against him, it would be a victory for institutional resilience in the U.S. In either case, there are major lessons for both investors and ordinary citizens. Central bank independence is not just an abstract concept debated by economists. It is a mechanism that directly determines the value of the money in our pockets. Now it's your turn. How do you think this development will affect the future of the dollar? Could gold and crypto assets serve as safe havens in this process? Share your thoughts in the comments so we can discuss them together. And if you want more in-depth analysis like this, don't forget to like the video and subscribe to the channel. In our next video, we'll dive into the potential surprise decisions from the Fed's September meeting and their effects on global markets. See you there.